Good morning, afternoon, and evening, everyone. Today I'm going to present what I think is a confluence of events, meaning we have the rare confluence or alignment where all indicators, both for crypto and equity and all risk for that matter, including Bitcoin, all indicators are bearish. And this is for the next few weeks, I'd say between, I'm making this in mid-December, so between mid-December and sometime in January, I think we're going to be topping out and going down. And I figured I'd make this video now to be a few steps ahead of the curve. And I'm not going to be showing the video, as you can see, because first of all, I want to leave as much room as I can so you can see the charts. And secondly, it's a bad hair day. So let's get started. And remember, this is NFA. This is not financial advice. I'm here to entertain you, believe it or not. So like I said, there's a confluence of bearish indicators, and these are the ones I'm going to be going over briefly with you. What you can do is stop the video, the podcast, and you can print it out because I'm going to be going real fast. There's a lot to talk about. So overall, I'm going to be looking at, and basically I've combined different types of indicators like sentiment, for example, with fundamental, and I'm combining crypto / Bitcoin and stock indicators all together because I've got confluence, I can do that. So let's get started. The first one is what's called a sentiment, or it's a sentiment indicator, and it's a contrarian indicator. And the first one of that is, because there's different types of contrarian indicators. The first one is Equities Fear and Greed Index, and we're at greed. And so the only worry right now is where you can get the next bottle of champagne to celebrate. And so it just shows you how much greed there is and FOMO. So to me, this is a clear-cut contrarian index that we're near a top. But you see, we can go to extreme. So what I'm doing now is I'm making this video ahead of that because we may go up another few weeks to the extreme greed level. But it's already hit the red line, meaning it's already hit a sell point. All right, next indicator. So this is the cryptocurrency version of the indicator I just showed you. So this is crypto's fear and greed indicator, and it comes from a website called alternative.me. And it's a great website because it updates this twice a day, and it gives you a nice evolution going over the last, I believe it's 2 years. And again, this is saying that, believe it or not, even Bitcoin and crypto is too high. It's topping out. Equity. So this is an indicator that I'm calling it an indicator. Basically, this was arisen from the Black-Scholes Merton options pricing model. You could basically calculate this indirectly. You solve for the VIX, basically. And the VIX, for those that don't know, is just simply a measure of volatility. And when the volatility is high, that usually aligns with a bottom of the market. So you want to buy risk assets like stocks when the indicator is high. So you saw in March 2020 that it hit like an insane level around 80, I don't know what it was, like 85, some crazy amount. I mean, anything above 30 is pretty high. So that was a clear-cut buy signal. And now, unfortunately, I have to tell you that we've hit a clear-cut sell signal. As of when I'm doing this video, at the time I'm doing this video, it's at 12.35. And I'm sorry to say that's actually at the pre-COVID levels. That's pretty bad. So this indicator, and I actually have an indicator that I've designed on my own that's similar to this. It's better at picking bottoms than tops. So sometimes this VIX will stay at this level for a while. So just be aware of that. Because if we're, for example, we're in a bull market, especially at the beginning of a bull market, and this indicator reaches a low level, it doesn't mean you should sell everything. It's just saying that there's so much buying, especially at call options, that the implied volatilities went down. So just be aware of that when you look at this. So this is why you don't want to look at all these charts individually. You want to look at them holistically together. And that's how you can make an educated and better decision. Okay, next chart. So this is just Bitcoin and ETH's version of implied volatility. So this is the only one that's not that bearish. It's just like flatlining. I would have guessed it would have been lower, like what we're seeing with the VIX. Otherwise, the reason I'm showing you this is so you could see that cryptocurrency also has equivalent versions of what you see for stocks, for example. Losing my voice. And this is internet search trends, and this is similar to what we saw in with the VIX. It works better on the buy side. You want to be buying stocks when this indicates spikes over 50, and you could see it hit 100 back in, again, March 2020. And then again in, I think that was around July 2022. And now hardly anyone searching for bear markets. So this is a contrarian indicator. So it's saying sell. And options, this is the option data on equities from the CBOE again. So the CBOE puts out the VIX, and they put out the put-to-call ratio data. And you could see that this is an inverse indicator. It's very clear here in the chart. So when the market was topping in June and July, the put-to-call ratio was hitting a bottom. And again, it looks like the put-to-call ratio is near a bottom, maybe not yet at a bottom, but it's near a bottom. And you can see the red line, which is the S&P 500, looks like it could be near a top. So this is a fairly good indicator, and it's a little better than the VIX in my view. I like the way it moves very inversely with the market. And this is a futures positioning on equity indices. Well, in this case, it's S&P 500, but you can get several other ones. So I want to point out that in, when was it? In June, I guess it was June, I was very bearish on the market. And all the indicators I had, except for this one, gave me a sell. And I apologize to you, but in the bottom here, I guess you can see my pointer. That's June, and that's where I was getting bearish. But if you look here, that green line is speculators, hedge funds. And so when they all sit on one side of the seesaw, as you might say, so when they're all shorting, the market usually goes up. And so when I was bearish at this time, this was the only indicator that was not agreeing with me. This was the only indicator saying that, as a contrarian indicator, it was saying the market could go up. And what happened was I was too early. So I was, usually I'm like a few weeks, I might be a few weeks too early, but in this case, I was up to, I can't remember exactly, about 7 to 8 weeks too early. And I think I should have considered this more, because this indicator was not bearish at that time. But this time, if you see, it is bearish, because you can see the green line is about this match with the red line. But if you go back, you could see it was higher. You could see the green line was higher. So I would say it's somewhat bearish, not extremely bearish, but somewhat bearish for the market. So I think it's going to work this time. I have more confidence that these charts are working, because I have so many that are in agreement with what I'm thinking as being bearish. So let's go to the next. Okay, here we go, the next slide. Okay, this is the percentage of stocks above their 50-day moving average. So there's a whole bunch you can use. I also use a 200-day moving average. So these are like stochastics. I call them stochastics because they move up and down with a regular pattern. And you can see when I was bearish in June, it peaked around 65. But then remember, if you remember, I just said to you earlier that I was too early. So that you could see it peaked again in mid-July, and it stayed at that peak for a while. So things can happen. Like maybe now, maybe this is I'm talking to you in December. Maybe it goes down because the market goes down a little. Maybe it goes down a little, but then it reaches a new high. You don't know, but right now it's already giving a sell reading. It's already at a bearish reading. So that's why I'm presenting it to you. This one is resistance levels. And you can see that we have resistance around where we are right now, around 4,600, 4,650. And this is the all-time high for the S&P. So I think it's going to be very difficult to break this for many reasons. One reason, for example, is that we haven't been at this level in a while. So, usually you test the level a few times before you break it. And of course, fundamentals, I don't think are good. I know there's a low probability, but there is a probability of a recession or a very soft landing next year. And the Fed has not pivoted. The Fed has not lowered interest rates. So that's why I think this resistance is going to hold. And this next one is for Bitcoin, and I combine both resistance and relative strength. So look at the bottom chart here. When the relative strength skyrockets and you get that green shadow, that usually means we're near a top. It doesn't mean we're at the top. It could be a blow-off top like we had in 2021 right here. But it is indicating, showing you that we might be at a blow-off top. And I think we can confirm that for a few reasons. One reason is this trend line. You can see that we're near I think it's a 47,000, around that level. So as I speak to you now, we're going towards 45,000. We're 44,000 something. So I think we only have maybe 2,000 more. That's my guess. Another 2,000, 2 to 3,000 up move in Bitcoin, and then we're going to hit a lot of resistance. Remember, a lot of people, including retail traders, small-time traders, lost money in crypto, and they're waiting to get out. They're not bullish. Like, they're still scared. They lost a lot of money, and they're happy to get some of it back or most of it back. So I think this is a clear sign that Bitcoin can go down. Okay, open interest. Open interest is rising. I think this is showing you a few things, but one thing is that there's leverage in the system, and that's not a good thing. One thing, or two things I want to point out. Number one, this is the highest amount of leverage, I would say, in open interest since 2022. Actually, I have another chart, which I didn't put here, that actually shows leverage for Bitcoin. It's from a Glassnode, but this one's sufficient. This is from the block. So I want to, like I said, I want to say two things. Number one, that we're at the highest open interest since 2022. The second point is we might be in a different regime because remember we had the Terra Luna crisis and Celsius. Remember Celsius, did a lot of rehypothecation and whatnot, and FTX went bankrupt. And remember, FTX was mostly futures exchange. So FTX was a big player in futures. So since they're gone, or at least reorganizing, there's less business on futures. And even with Binance, there's a lot of pressure on Binance. So if you think about it, there's less pressure. Not less pressure. There's less business on futures because of what I just said. So like these peaks of 2021 and 2022, which did mark some local tops in Bitcoin, an all-time high and an all-time top here into 21. I don't know if they're going to repeat for a while because of what I just said. This might be a different regime because there's no new version of FTX right now. Okay, S&P 500 and global liquidity. Okay, this is going to look it's going to sound a little contradictory because S&P is rising and you could see it's highly correlated with global liquidity. But my point is, number one, that liquidity in the United States is declining. It's not even right. I put lackluster. I think overall liquidity is lackluster, but liquidity in the United States is declining. The Federal Reserve balance sheet is declining. And of course, you adjust that with reverse repos and the Treasury general account. But what we're looking at here is global liquidity. So if you include Asia, if you look on the right side here, I know it's hard to see, you can see this uptick in liquidity. So my point is that I don't think liquidity is rising fast enough to support stock prices, including crypto. You have to remember, interest rates are much higher. They were near zero in 2022 or 2021, I'm trying to remember. But now we're at between 4 to 5%, depending on what year you're looking at the Treasury curve. So at that level, I think you need a much more liquidity to push up the market and to pump up crypto. So even though crypto's gone up a lot, I'm very suspicious that it'll last because we don't have enough liquidity. And that's nearly my last point. My last point actually is that the media is very, very bullish on crypto. And here's an example from Crypto Banter. They're like, don't miss this trade. Don't be late. By now, everything's going up. And this video here on the left side says like ETH at $80. And that's Solana, by the way. He's referring to Solana, which was hit a low of $8 and it was $20 now just a few months ago. And now it's over 70. So it's been a very, very intense speculative crypto market, to say the least. So our verdict is that I'm turning bearish now. And I think this is going to cover the period because I'm not perfect and I make mistakes. And maybe I'm totally wrong. Maybe the market will keep going up. But based on my history, I think that the market is going to decline between mid-December and sometime next year. So I hope you all enjoyed this video. If you did, smash that like button and become a subscriber. Take care and good luck and be safe.